Hello, I am Kim Taguibulosan and I, together with Ifami Taguibulosan, will discuss Chapter 10 which is about the recovery of credit granted. This chapter is primarily about the remedies available to a creditor in case of non-payment. It will propose remedies on unpaid debt based on the following. 1. The loan or credit transaction has been consumed. 2. There was complete transfer of possession by delivery or both ownership and possession. Questions on goods in transmit will not be covered here. 3. The seller has discharged with this obligation to deliver a determinate thing, but the buyer refuses to or cannot pay. 4. There are no product defects or violation of warranties on the part of the seller. These limitations are imposed because there are so many voluminous transactions and contacts of sale and credit that are non-recurring or are very uncommon. Example of non-recurring and uncommon incidents are 1. Non-performance by buyer while goods are in transit. 2. Insolvency of buyer while goods are in transit. 3. Effects of partial delivery. And 4. Product defects. Most common collection problems are the result of simple non-payment, which is a major concern for credit and collection managers. To facilitate the understanding of this chapter, it is important to again classify credit. We have 1. Simple loan. Under this, we have A. Loans of fungible and consumable things. B. Cash loan. 2. Credit on consumable durables. Example of this are appliances. 3. Credit on movables like vehicles. 4 is credit on immovables like real estate. Credit secured by immovables. Loans of fungible or consumable things. Fungible things are products expressed in unit of measure like weight, number, or volume like cooking oil, rice, salt, and canned goods. Consumable are classified according to their nature. Loans of fungible and consumable things are technically called mutuo. Example: a 100,000 pesos cash loan will also be consumed or used has to be paid back in the same kind, in a cash, and the same quantity, which is 100,000 pesos. Take note that for fungible, obligation of the borrower is to return in a cash loan. The obligation of the borrower is to pay the loan. Cash loan. In a cash loan, the borrower's obligation is to pay back loan in the same currency and in the same amount unless otherwise provided. Cash loans are either secured or unsecured. This kind of transaction is a loan and should be governed by civil code provisions on sale. Credit for merchandise. In a cash loan, cash is given by the lender and he is to be paid back also in a cash. In merchandise credit, the supplier provides merchandise and the debtor pays him back in a cash. A transaction for merchandise credit is a sale and be governed by civil code provision on sales. Almost all merchandise credit is unsecured, and if secured, the security is not the merchandise, but another party of the debtor such as real estate. Credit for consumer durables. Example of durables are TV and refrigerators, which are sold by appliances companies on installment basis. The document used in installment sales of durables but not movable is a deed of conditional sale or sale with reservation of title, which transfers the possession of the TVs and refs but withholds or reserves the ownership, which is retained by the seller. Credit on sale of movables. Example are motorcycles sold by appliances companies and financed by them, and cars sold by car dealers and financed by banks. Movables, however, have to be sold on an absolute basis to the buyers. The law on mortgages, Article 2085, Paragraph 2, required that the mortgator must be the absolute owner of the thing mortgaged. The only way to do that is by using the buyer an absolute deed of sale. then the buyer and new owner can mortgage it back to the seller. Credit on immovables or real estate. There are two kinds. 1. Installment sales on a piece of property like a subdivision lot or similar properties. This is a sale transaction. 2. Cash loans secured by real estate. There are movables that cannot be registered with the LTO, like graders and loader. A mortgage document is possible but difficult to enforce because they are not registered. The document used is deed of conditional sale. There are many factors that determine what recovery efforts should be undertaken in case of non-payment. 1. Nature of the thing which is the object of the credit, cash or merchandise. 2. If loan is secured or unsecured. 3. If secured, nature of property used as security, personal property, movable, immovable, and incorporeal right. 4. Nature of the document used, mortgage, pledge, and trust receipt. 5. Nature of the relationship between the buyer and the seller. 6. Nature of the lender, seller's main business. 7. Special circumstances attending the sale or credit transaction. Now, let's move on to our part 2 of this chapter, which is about the friendly recovery efforts. An enterprise, whether it is a bank, a retailer, or an appliances company, is in business in the long term. It is a going concern and its perpetuation or long-term existence is a primary objective of its owner. The debtor's motivation to pay in a cash loan with a real estate mortgage. The debtor is motivated to pay for two reasons. 1. He may need more bank financing in the near future, or 2. The market value of the property mortgage is substantially more than the balance of the loan. In a credit transaction for a merchandise, a wholesaler and retailer, the debtor retailer is motivated to pay back because he wants to continue his profitable relationship with the wholesalers, or he either expects a higher credit limit or better terms 90 to 120 days. Also, he wants to protect his credit standing so that the other wholesalers will also take him as a credit customer. Some friendly recovery are 1. Term extension, 2. Merchandise return and swap, 3. Condonation on penalties and surcharges, 4. Restructuring. Under this we have A. Simple and B. Document substitution. 5. Deposit of durables and movables at the branch store. 6. Debtor substitution. 7. Dacian and pago. In English is settlement. 8. Addition of guarantor or surety. And 9. Securitization. Term extension. A creditor simply adds a few more days or weeks, even a month, to the due date of an account. This gives the debtor extra time to recognize his resources and make good on his obligation. Term extension could also be used in a bank loans. The extension, however, should be for a very short period of time because interest, penalties, and surcharges could accumulate very quickly. Merchandise return swap. If most of the merchandise remains unsold, the wholesaler or creditor could take back the merchandise from the debtor. This is advisable if the goods cannot be sold in the area where the debtor's locality or the merchandise has become obsolete or out of fashion. This is a good option if the goods could be sold somewhere else. A swap arrangement is also a good option. The unsold merchandise is retaken by the seller and new merchandise to its customer.